What's up guys? Duracell Dave here from the trading community Art of Aping, where we show you how to become your own whale and reach your own form of generational wealth through our tools, tips, tricks, and trading signals like the one that just went off right now. How serendipitous is that? Today what I really want to focus on is something that's so important in your trading journey, which is understanding how to size your positions correctly, maximize the amount of profit that you can make while making sure that you're still upholding and honoring the risk management parameters that you've set for your portfolio to make sure that you're not gambling or you blow up your account. One of the main things that we like to say inside of our community is we like to bet late and bet heavy. So often do people look at an entry point in trading as the end-all be-all point and price and position that they're supposed to go into. They ape in with 1%, 5% of their portfolio, and then the second that the position starts to go in the opposite direction that they want, what happens? A lot of bad things happen. Blood starts to boil, start to freak out, the drawdown starts to kill you, and you end up exiting a trade, that you otherwise could have held and turned into a winner. And so I want to show you a couple different ways that I like to be malleable on how I do my setups, but still making sure that I have an opportunity to capture as much profit as possible, which inevitably is the core psychology behind why we like to bet so heavy early on, why we like to just put our entire bag in on that first position. I'm going to take a real world example here with Bitcoin at the moment and just kind of show you a couple different scenarios and the best and easiest way that I would be able to layer into this position and still maximize that profit. We're looking at Bitcoin today on the 1 hour. I could see price currently at 19.4-ish. And I'm starting to look for, gosh, where would my entry be? Okay, great. I'm looking at what I've identified as a fair value gap right here. And so inside of this area is where I want to enter a position, where most people would be taught to enter a position into a short, for instance, right? Maybe what we're looking for right now is price to retrace this pump that just happened. And so we're targeting the 618 here. All right, so great. This is our target. This is our zone. We'll get rid of the fib at the moment. A new trader might want to do something like this, where they actually just enter all of their position right here, 1% of their portfolio. Doing so would provide you a 1.58R. We teach things a little differently at Art of Aping because, again, betting late and betting heavy goes in both directions. Also, whenever you're actually entering into a trade, you want to make sure that you know exactly the amount that you should be putting in. So one of the tools that I always have on handy on a separate tab is CalcTrade. That's calc.trade. Check this out. It has every single pair that you need up top. You know, I can type in Rune USDT, I can type ETH USDT, anything and everything that you can actually think of. I always have this on my desktop all day long. And so for the sake of this, we're gonna be doing Bitcoin. It's very simple to use. We start off with our total capital up top. For my sake, it's $100,000. The risk parameters that I've decided to ingrain the principles on how much I'm going to bet every single trade consistently. For myself, it usually ranges between 0.5% all the way up to 2%. We'll use 1% right here. And then just like that, you're able to pick long, short positions, choose your entries, your stop losses, and right there, what it's gonna do is it's gonna spit out for you the actual position size, the amount of Bitcoin that I am going to be purchasing, and the risk to reward parameters, the risk to reward ratio for this specific trade. Now, if we looked at this trade, you could just enter right here with your full 1%. And what may happen is this. Price could hit it, tap the fair value gap, start to come down a little bit. You're not taking profit in this area, and then it starts to go up. Tap again, then it starts to go up. And at this point, we know what happens, right? We start to freak out when we see red on our screen. We're not quite sure if our thesis, if our directional trend was sound. And we start making silly decisions because time kills all deals. Here's what I'm gonna show you. A really easy DCA method, bet late, bet heavy in both directions. So what I normally do again, just like I have CalcTrade up, instead of just using 1% here, what I would do is I would actually set 3 DCA points on this specific trade. My points are still picked off of my concept and understanding of technical analysis and price action, which we're happy to show you inside of our community, I'm basically I'm front running by a few dollars the start of this fair value gap. I'm DCAing at the top of the fair value gap, and then I'm DCAing again in case price wants to take out the top of this candle as well too, where there might be some liquidity, there might be some stop losses up and around here. Yeah. When you set up a trade this way, we have an opportunity to still capture a lot of money, a lot of profit. If I were to be looking at price moving so quickly and I had to enter this trade very fast and efficiently, again, calc trade is my savior in this type of scenario. What I'm gonna go do here is I will just tab back over and I'll make a conscious effort in understanding to begin with that I might only wanna do 50% at this specific price. I might want to do 25% here, and then I'll do another 25% at this one. Imagine those are flush. So I know where my stop loss is at. It's at 24.49. I know my specific entry points, and all I'm gonna do preemptively, I'm gonna worry about getting into this trade first because I want skin in the game. We wanna make sure that the train has not left the station and we can at least gain some profit, which in this scenario, if I only had 50% of my portfolio in, of my risk tolerance in, still making 1.58 R on this trade is great. You're almost at 1% gain on your portfolio. Congratulations. So I would look at this, I'd switch over, tab over to calc trade, and let's make sure that we can right click here and look at our entries. Okay, 19693, yep. I'll just show you how quick, right? 19693. I already have the stop loss. It spits this out for me. And I'm now at 1.5%. So I know, okay, 0.62 BTC is gonna be my actual position. I can set the limit order on my phone, Bybit, Binance, whatever it is that you use. And now I can actually calm myself for a second and go, okay, I do have skin in the game now. What is the next thing that I can do that will maximize profit for me, but also make sure that I mitigate risk and that I don't blow up my account? I'm in with half my risk. Now I'm gonna go do the exact same thing over here. 25% on this one. So entry, 19789, right? Go over here, 19789.5. Risk, 0.25%. Everything else stays the same. Stop loss, great. I know I'm gonna add another 0.352 BTC here. Fantastic. Limit order on the phone, Bybit, good to go. Next, one more, 19995. Super simple, 19995.5. Great. 0.496 BTC, and this is what I'm looking at right here, the position size. It's very important. As price starts to go against me momentarily here, I no longer have to panic. This isn't a bad thing. This is now an opportunity for me to do a couple things. Again, hit my next orders, DCA in, or maybe if the price move was so violent, a new condition has just been revealed to me within the market, letting me understand, oh shoot, well, this isn't actually the best trade to be in. I can cut my losses minimally, we like to call that a paper cut, or I can wait to see price settle again, right? Price may do something like this in this scenario, where it comes up, it accepts, this range that's over here momentarily before deciding to come back down. And only when it starts to come back down, what can I do? I can mark it into another position. So this is one scenario that I wanted to show you, but again, everything is based around calc trade, around understanding very, very quickly how I can enter into a trade. Now, I'm obviously using an 1 hour chart for BTC here, so usually there's some more intention, time, and thoughts going into these positions, but I use calc trade on the 1 minute, on the 5 minute, the 15 minute. Whenever there's a scalping opportunity, it helps me understand very, very quickly how to size something. And because I'm not going in with more than 1% of my portfolio, usually with that original position, if I'm off by a few dollars, that's okay. If I looked at price and price originally was at 19,688, the original entry point, right? And I'm going to calc trade. And in the time that I've actually gone to calc trade, price has now come down to 19,650. I don't have to worry about it. I don't have to recalculate that position. I'm gonna enter it so I have skin in the game. And then from there, I can start to layer in my next if-then theses, so to speak. So looking at this specific DCA method with CalcTrade, one part of what I'm trying to teach you here today, it would actually give you a profit of this, 2,100 and change, which is a great trade, effectively 2R for a 100K account. I want to give you the other side of this and why, again, we tell everybody to just bet late and bet heavy. Don't put all your eggs in that first entry point, that first basket, right? So let's give the hypothetical where instead of price going all the way up, hitting the first entry, the second entry, and the third entry, what if it just triggered my first entry and then it actually starts going in the direction that I want? And this happens sometimes, and you're not alone. Truly, when this happens, you're like, oh my God, why didn't I bet the whole farm on this actual trade, on this position? Fear not, because again, if we bet late and bet heavy, there's a way for us to recoup. So price hits our first entry point, it starts to come down, and it starts to fiddle around again with this range here. Once I see it break through this range and this point of control over here, and now it's gonna go gravitate to this point of control, well, I can now layer into this trade, compound this trade, going in the direction that I want it to go. In this example, I'll show you. Now, my original entry point stayed the same, but as price started to break this zone, I'm now entering with what? The remaining 0.5% of portfolio that was here. I canceled these two limit orders, and now I've just compounded the trade on the way down, on the way to profit. Most people don't grasp that. And of course, if you notice on these two, here, I'll get rid of these three positions so we're not cluttering the chart right now. What do you see here? All right, obviously my original entry and my original stop loss stayed the same. I'm protecting my portfolio. But I set up this stop loss behind these highs over here as a point of protection. And I set that up because of where price was currently. Normally, as you're going through different levels in price, there are demand zones, there are supply zones, there are point of control, there are ranges. And all of these help us cultivate if-then scenarios. So if I literally see that price is going in the direction that I want now, and I want to compound, once we've passed this area, I can now feel confident to compound and actually have a stop loss that's a little tighter in relation to my original position, but is still structurally sound because I know that we've already blown through any positions that were here. Any people that, were gonna get liquidated or are now exiting their trade at break even and the price bounced momentarily, we've broke that. And so taking like classic auction theory, where's price gonna go next? It's gonna go to the next area where it can actually fill different bids, different asks, or a different range that it's going to hop down to, which is why I'm totally okay now again with compounding. And what you'd be pleasantly surprised to find here when you bet late and you bet heavy and you actually have the foresight to be able to use CalcTrade, I would have done the same thing here, right? I would have had my original position, 0.5% risk, which I would have put right here. I would have had my entry point, 19,693. 19,693. You get the gist of it. And then what would I have to understand my limit order? A second, 19,197. I'm looking at the entry here, 19,197. My stop loss is different here now. It's 19,530. 19,530. I now know my position size, 1.5 BTC. If you remember the original positions that I have with my first three DCAs, this 1.5 BTC is quite large. I have confluence now in understanding that I was right in the direction that I thought price was going to go. I now no longer have to miss the chance or gamble the luck of betting so heavy on the front end and price going against me. I'm just simply going to compound it. What ends up being our actual price, or excuse me, our actual take profit for this trade? $1,844. If you look at the profit that you were to have received here versus the profit here on the DCA, this is realizing 87% of the profit that you would have realized on the DCA if there was initial drawdown. That is the best way and the best example that I can show you about you don't have to bet the farm every single time on that first entry point. Be protective over your bag and your portfolio Realize that you don't have to have so much skin in the game to begin with. And please feel free to utilize, again, it's a free software, CalTrade, free website, excuse me, on any and every single coin. I live and breathe this. If you guys want to learn more about how we actually do DCA, set up a phone call with one of our techs, see if you're the right fit for our actual community. But we're happy to show you the best ways for you to consistently make gains without risking your bag. All right, guys, I'll see you next time. Take care.